I know where Bitcoin's going. It's going to 13 million a coin. I'm willing to bet $15 billion on it.
Michael Saylor begins by highlighting the importance of institutional adoption in driving Bitcoin's growth. He makes an intriguing observation about the historical ties between major financial institutions like Citibank and influential figures such as John D. Rockefeller. These banks, deeply entrenched in the global financial system for over a century, are trusted by large corporations for managing significant capital flows. Saylor envisions a future where companies like Google, Meta, and Microsoft routinely allocate billions of dollars into Bitcoin through these trusted banks. The involvement of too-big-to-fail banks like JP Morgan, Citibank, and Goldman Sachs in Bitcoin custody would mark a significant turning point. Once these institutions are allowed to offer Bitcoin custody services, it will unlock the potential for large-scale corporate investment in Bitcoin. This, in turn, could lead to a massive influx of capital into the Bitcoin ecosystem, driving up its value. Saylor emphasizes that for Bitcoin to reach its full potential, it must be integrated into the existing financial infrastructure, with major banks playing a central role in its adoption. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I want to make an observation. Citibank is based on National City Bank. And do you guys know the origin of National City Bank? The head of National City Bank was John D. Rockefeller's brother. And National City Bank was the bank set up by John D. Rockefeller because he didn't want to trust his money with JP Morgan. And so that happened more than 100 years ago. People that do business with these banks sometimes keep the same bank for 100 years. JP Morgan, Citibank, they're more than 100 years old. So a CFO, they want to do business with a bank they trust. And the world that I'm seeing is a world where Google generates $1 billion a month, and they send $1 billion a month to Citibank or JP Morgan, and they say, buy $1 billion of Bitcoin. And it's like $1 billion, now it's $2 billion a month. And then Meta sends $1 billion a month, and Microsoft sends $5 billion. And if you want to see a world where billions of dollars a month flow, and then it flows into the Bitcoin ecosystem, then it has to be with a bank that is too big to fail. When you're $1 trillion company, you're not going to send your money to a bank that's the third-tier bank that isn't too big to fail, because your shareholders don't expect you to take that risk. So I think the catalyst is going to be banking acceptance. When that happens, you kind of look at that as, these are the high power rails, right? These are the rails that move $1 billion a day, maybe $1 billion an hour, maybe $1 billion a minute, right? And when we get there, then I think Bitcoin takes its next leg up.
One of the most thought-provoking aspects of Saylor's discussion is his perspective on volatility. While many investors view volatility as a risk, Saylor sees it as a vital component of Bitcoin's growth trajectory. He argues that volatility creates opportunities for those who understand the asset and have the conviction to hold or accumulate more during downturns. Saylor paints a vivid picture of a future where Bitcoin reaches $13 million per coin. He contrasts different timelines for this price increase, explaining that if Bitcoin were to skyrocket to $13 million overnight, it would be disastrous for most investors. They would miss out on the opportunity to accumulate more Bitcoin at lower prices, and the sudden surge would limit the ability of new entrants to participate in the market.
If Bitcoin is lower than it is right now in 4 years, you should count yourself lucky because you get to buy it, okay? And by the way, that's not me. That's Warren Buffett speaking. Warren would say the same thing, right? Warren would be a Bitcoiner if he was just 40 years younger. Trust me. Just, I'm probably not so open to the new, like, telepathic coin when I'm 99, or whatever. I might not be on stage talking about the new thing, but my point is Warren Buffett would say you shouldn't be sad when the price is lower. It's your opportunity to buy it. My second point, if you had a choice in this audience, and if I said, I know where Bitcoin's going, it's going to 13 million a coin, I'm willing to bet $15 billion on it, maybe 50 billion, maybe 100 billion on it. That's what I believe. Now, if I told you it's going to 13 million a coin tomorrow, how do you feel? What would you be thinking? Now, if I told you it'll go to 13 million a coin in 8 years, what are you thinking? Now, if I told you it's going to go to 13 million a coin in 21 years, what are you thinking? And let me tell you, what's the most valuable information in the world? It's not knowing what's going to happen tomorrow. In fact, if I told you it was going to go to 13 million in 21 years, and it was going to go perfectly linearly with no volatility, is that better than if it goes to 13 million and it goes all over the place like this? And I'm going to give you my opinion. The worst thing is to know what happens tomorrow. If it goes to 13 million tomorrow, the only Bitcoin you're ever going to have is what you have in your pocket right now. And your thought is going to be, damn, I should have bought more. My second thought is, oh, all my family and friends, it's too late for them. They missed it. I feel really awful because I wanted to get them into it. The third thought is, wow, I don't have time to go refinance my house. The fourth thought is, well, how do I start a business and raise $1 billion to buy more Bitcoin? I'm not going to get that done by tomorrow morning. Fifth thought is, damn, I have all this money. It's not on the exchange. I can't wire it because banks are closed tonight. Okay, that's awful news. You don't want that. Okay? If I give you 8 years, okay, you have 8 years, but that's not enough time for everybody to get on board. If I give you 21 years and it's perfectly linear, that's awful too, because every stupid normie person that doesn't believe in Bitcoin, that doesn't understand what you understand, that has no conviction, they're going to get more Bitcoin than you because they're just this. Do you want this stupid, dumb money to buy all your Bitcoin before you buy it? No, you don't want it to be non-volatile. Here's what you want. You want it to be extremely volatile because that way you know something nobody else knows. I give you 21 years and you can go start a company, borrow money, raise capital, start a hedge fund, create a Bitcoin business, tell your friends, start a podcast, build a life for yourself, get leverage, mortgage your house, change the view of your bank. I'm giving you the ability to do work. It's a lever. It's a 21-year lever, okay? Like MicroStrategy's been working 4 years. If Bitcoin had gone from 10,000 to 65,000 on August 11th, on the day we announced our Bitcoin buy on August 10th, we wouldn't be worth 40 billion right now. We would be worth 4 billion right now. You see, so you want the lever, you want the time, and the second thing you want is you want massive volatility. Because, like for example, when Bitcoin went from 66,000 to 16,000, everybody else, had a crap, lost their minds, freaked out, and we doubled down, right? And it was a benefit for us. It was a problem for everybody else. We ripped up. And so you get the chance to prove yourself economically, and you get a chance to prove yourself intellectually, and you get a chance to prove yourself morally and ethically if you live through the volatility. You should pray for the volatility. When it goes away, you'll lose your advantage, and you should be happy that you know where everybody else on the planet's going to be in 21 years. You got a 21-year head start. That's a career. You can make a life out of that. And don't worry about the stuff that comes in the middle. It's a good thing. No, when Bitcoin is 13 million a coin, if you look at my base case, Bitcoin is like 20-30% of the equity market. And so it's just big enough that the volatility is decreasing. But my model and my mind and what we're thinking is, if the money supply expands at 7%, the equity index will expand about 10%. The volatility of the S&P index will be about 10 to 12. The volatility of Bitcoin will be 20 to 22. It'll always be more volatile. The performance will be 20 to 22 ARR. It'll always be higher performance, always be more volatile, because it's an open, unregulated global market, because it doesn't have the counterparty risks, and it strips away the risk of a company, and it strips away the entropic degradation of physical property. It's always going to be better. It's always going to be more volatile, and I'm not concerned about it. That's why even when Bitcoin's 13 million, you'd be stupid to sell your Bitcoin and buy the other stuff. The other stuff's always going to be inferior.
In conclusion, Michael Saylor's vision for Bitcoin is clear. It is not just a speculative asset, but a transformative financial technology poised to reshape the global economy. By emphasizing the importance of institutional adoption, favorable regulation, and embracing volatility as a tool for growth, Saylor provides a roadmap for long-term investors to capitalize on Bitcoin's potential. As Bitcoin integrates further into the financial system, those who understand and adapt to these dynamics will be best positioned to benefit from its inevitable rise. Thanks for watching. If you enjoyed this video, don't forget to like, share, and subscribe for more insights on investment strategies and financial tips. Leave your questions and comments below. I'd love to hear from you.